OpenAI just filed for IPO. The $1 trillion AI takeover begins. OpenAI's IPO changes everything, and almost nobody sees the real story. OpenAI just filed for an IPO. And if you're thinking this is just another tech company going public, you're missing the biggest story in artificial intelligence. Because this isn't really about an $850 billion valuation.
It's not even about ChatGPT.
It's about who controls the future operating system of human work. And if OpenAI wins this battle, the next trillion-dollar company may not be selling AI at all. It may be selling something far more valuable, something that most investors, companies, and even AI users completely misunderstand. Today, we'll break down why OpenAI's IPO could become one of the most important financial events of the decade, and why the trillion-dollar question everyone is asking is actually the wrong question. The AI IPO race has begun. Over the past few weeks, something extraordinary happened. First, Anthropic filed confidentially for an IPO. Then OpenAI followed. Suddenly, the two most important AI companies on Earth are preparing for public markets almost simultaneously. That's not a coincidence. It's a signal that the AI race has entered a completely new phase. Until now, AI has been funded primarily by venture capitalists, sovereign wealth funds, and big tech giants. But training the next generation of AI models requires something almost unimaginable. More GPUs, more data centers, more electricity, more capital than Silicon Valley alone can provide. The public markets are the deepest pool of money on Earth. And OpenAI wants access. Lots of access. But here's where things get interesting. The real story isn't why OpenAI wants Wall Street. The real story is what Wall Street is being asked to believe. The trillion-dollar bet. Most people think investors are betting on better AI models. They're not. At least not entirely. The actual bet is much bigger. Investors are being asked to believe that OpenAI can do two things at the same time. First, make intelligence incredibly cheap. And second, build the systems around that intelligence that everyone becomes dependent on. Those two things together could create one of the largest businesses in history. Let me explain. Imagine electricity. Eventually, electricity became cheap. But the companies that created the most value weren't necessarily the ones generating electricity. The winners were the companies that built entire industries around it. AI is moving in the same direction. Intelligence itself is becoming abundant. The real value is moving somewhere else. And that somewhere else is where the future trillion-dollar battle is being fought. The secret weapon called the harness. Most people think ChatGPT is the product. It's not. ChatGPT is becoming something much larger. A work platform. A work operating system. What really matters isn't the model. It's the harness around the model. Think about what happens when an AI system has access to your files, access to your emails, access to your code, access to your company documents, memory of past work, permission systems, evaluation systems, workflow automation. Now you're not buying intelligence. You're buying completed work. That's a completely different business. The AI model is merely the engine. The harness is the car. And whoever owns the car owns the customer. That's why OpenAI, Anthropic, Google, Microsoft, and every major AI company are racing to build complete AI ecosystems instead of simply selling APIs. Because APIs eventually become commodities. Workflows don't. Why cheap AI could make OpenAI more valuable? Here's the part most people get wrong. When they hear about ChatGPT's expensive subscription plans or massive AI usage, they assume OpenAI must be losing enormous amounts of money. Maybe. Maybe not. Because the price customers see is not necessarily the actual cost of serving AI. The real question is this. Can OpenAI make AI cheaper faster than demand grows? If the answer is yes, everything changes. Every breakthrough in inference, every optimization, every routing improvement, every new GPU generation, every efficiency gain makes intelligence cheaper. And when intelligence becomes cheaper, usage explodes. And when usage explodes, the company controlling the workflow layer becomes dramatically more valuable. That's the hidden IPO thesis. Not smarter AI, cheaper AI. the problem OpenAI can't solve alone. But there's one obstacle standing in OpenAI's way. Context. OpenAI knows models. Your company knows reality. OpenAI doesn't know. Your internal processes, your hidden spreadsheets, your approval chains, your real sources of truth, your company politics. And that's a massive problem. Because AI without context is often just expensive autocomplete. This is why OpenAI and Anthropic are increasingly sending engineers directly into companies. Not because they're consulting firms, but because they're trying to capture the most valuable thing in business: context. Whoever controls context controls the workflow. And whoever controls the workflow controls the value. The Microsoft question nobody is asking. Now, let's talk about the elephant in the room. Microsoft. Microsoft helped turn OpenAI into a global powerhouse. But something fascinating is happening. OpenAI and Microsoft are simultaneously partners and competitors. They need each other. Yet they're increasingly moving into each other's territory. As OpenAI enters public markets, investors will begin asking difficult questions. How dependent is OpenAI on Microsoft? How dependent is Microsoft on OpenAI? And what happens if their incentives diverge? The answer could reshape the entire AI industry over the next decade. Because whenever trillion-dollar companies start competing with their closest allies, things get very interesting. The biggest risk. Let's be honest. The bull case sounds amazing, but there's also a bear case. A very serious one. What if AI models become commodities? What if open source models keep improving? What if companies decide to build their own AI workflows? What if OpenAI becomes merely a supplier of intelligence instead of the owner of the work layer? Then the economics look very different. Suddenly OpenAI is competing on price. And price competition destroys margins. This is why the battle over the harness matters so much. The harness determines who captures the value, not necessarily the model. The investment question everyone should ask. When OpenAI eventually reveals more details about its IPO, investors will obsess over revenue. Revenue matters, but it isn't the most important metric. The real questions are: can OpenAI reduce AI serving costs over time? Can it improve margins as usage grows? Can it turn users into workflow customers? Can it become embedded inside companies? Can it own the operating system of work? Those answers matter far more than a valuation headline. Because a trillion-dollar valuation only makes sense if OpenAI becomes the default layer through which billions of people work, not just the chatbot they occasionally use. The biggest misunderstanding about AI is thinking that AI itself is the product. It isn't. AI is becoming infrastructure. The real battle is for the layer above it, the layer that organizes work, the layer that controls context, the layer that decides which AI gets used and when, the layer that owns the customer relationship. That is the future. And that is what OpenAI's IPO is really about. Not a trillion-dollar valuation, not ChatGPT, not even artificial intelligence. It's about who controls the operating system of human work in the age of AI. And that may become the most valuable business ever created. If you enjoyed this breakdown, subscribe, because the moment OpenAI's S1 becomes public, we'll analyze every page and reveal what Wall Street is really being told. Because the AI race is no longer about building intelligence. It's about owning the future built on top of it. The real story nobody is talking about. When OpenAI files for a trillion-dollar IPO, most investors immediately focus on one question. Is OpenAI worth $850 billion or even $1 trillion? But that is the wrong question. The real question is, can OpenAI remain the dominant AI company long enough to justify that valuation? Because unlike Microsoft, Apple, or Google during their growth phases, OpenAI is facing the most intense technological competition in modern history. And every month, that competition gets stronger. OpenAI's biggest problem: AI is becoming a commodity. 2 years ago, ChatGPT was nearly untouchable. Today, users can choose Claude, Gemini, DeepSeek, Qwen, and Grok, hundreds of specialized AI agents. The moat is shrinking. The cost of intelligence is collapsing. And that creates a massive risk for investors. Historically, Companies that own a technology become rich. But companies that merely sell a commodity eventually see margins collapse. OpenAI knows this. That's why they're no longer trying to sell AI. They're trying to sell the operating system of work. Claude is quietly winning enterprise AI. While everyone talks about ChatGPT users, Anthropic has been dominating enterprises. Large corporations increasingly prefer Claude because of better coding performance, stronger safety, controls, larger context windows, better long document reasoning. Anthropic's valuation has reportedly approached $1 trillion ahead of its IPO plans. What's even more interesting is that enterprise customers generate far more revenue than consumers. One Fortune 500 company can be worth more than millions of casual ChatGPT users. This is why many analysts believe the real AI battle isn't ChatGPT versus Claude. It's consumer AI versus enterprise AI. And right now, Claude is arguably the strongest enterprise-focused AI platform in the world. Google's secret weapon: distribution monopoly. Many investors are completely underestimating Google. Google doesn't need to convince users to download an app. Google already owns Android search, Chrome, Gmail, YouTube, Google Workspace. Now Gemini is being integrated into every one of those products. Gemini capabilities continue expanding across Google's ecosystem and Android updates. Imagine if every Android phone ships with Gemini. Imagine Gemini becoming the default assistant for billions of users. Imagine Google Search gradually transforming into Gemini Search. Suddenly, OpenAI isn't competing against a startup. It's competing against the distribution machine that controls much of the internet. That is monopoly-level power. And Wall Street understands this. The biggest threat to OpenAI might not be Claude. It might be Google. Then China changed everything. Just when investors thought the race was OpenAI versus Claude versus Gemini, China entered the chat. GLM 5.2 shocked the AI industry. Reports indicate GLM 5.2 has surpassed GPT 5.5 on certain key benchmarks, particularly around complex coding and long-horizon engineering tasks. And that's terrifying for OpenAI investors.
Why?
Because GLM 5.2 isn't just powerful. It's open. It's cheaper. And it offers a massive 1 million token context window. If companies can deploy an open model that performs near GPT 5.5 levels for a fraction of the cost, OpenAI's pricing power could face enormous pressure. This is exactly what happened in cloud computing. This is exactly what happened in databases. And now it may happen in AI. The revenue explosion. The bullish case for OpenAI remains enormous. OpenAI reportedly generated approximately $5.7 billion of revenue in Q1 2026 alone, according to shareholder documents cited by reports. Annualized, that implies a run rate exceeding $20 billion. At those numbers, OpenAI is already one of the fastest growing companies in history. But there's a catch. Revenue is not profit. OpenAI reportedly burned about $3.7 billion during the same quarter. That means growth is extraordinary. But costs are extraordinary too. The profitability problem. Most investors assume AI companies will eventually print money. Maybe. Maybe not. Training frontier models now costs tens of billions. Building AI data centers costs tens of billions. Buying GPUs costs tens of billions. Electricity costs continue rising. This means AI companies must achieve something very difficult: grow revenue faster than infrastructure costs. OpenAI's biggest challenge isn't building smarter AI. It's building profitable AI. The monopoly scenario. Let's imagine OpenAI wins. ChatGPT becomes the default AI assistant. Codex dominates software engineering. OpenAI controls enterprise workflows. Agents automate knowledge work. Developers build everything on OpenAI APIs. In that world, revenue could exceed $100 billion annually. Gross margins could expand dramatically. Valuation could surpass several trillion dollars. This is the dream investors are buying, not ChatGPT, the operating system of intelligence itself.